So good, I would say, afternoon indeed. For that session, which is a bit challenging in very late morning. The topic as well is very challenging. It's very ambitious for a 15-minute session, fireside chat. So the topic is instant, global, and always on. Who are the winners and losers in the new capital market infrastructure? I will not be the first one to refer to it, but last night our gala reception of ICMA took place at the Natural History Museum, and there was some portrait of Charles Darwin. So speaking about Darwinism, definitely we may wonder, considering the always evolving and in a way accelerating market infrastructure, who will be in fact those who will be able to survive or to adapt, who will die, and who will, I would say, strive through that accelerating and evolving financial market infrastructure all over the world, in fact. So for answering that very challenging question, we have a very highly skilled invited guest today on the stage, Kay Swinburne, and I'm very honored to be the moderator along with her, because we met each other when you used to be in the European Parliament. Kay, for those which are UK-based, is very well known in the City of London in the UK marketplace. For those which are not UK-based, and you have many international attendees, as illustrated by the previous panel session, are probably less aware of yourself, I would say. Kay, beyond the UK political side of it, of her, so on the UK side, you more recently joined the House of Lords, but after various very prominent political positions on the UK political scene, but also previously, during 10 years, from 2009 to 2019, Kay has been part of the European Parliament in Brussels, in the Economic and Monetary Affairs Committee, and in particular, you became the vice chair of it at some point. And Kay definitely, and very sincerely, was instrumental in key legislative files at EU level. And among others, I'm thinking about the so-called market in financial instruments legislation, the MIF, the CCP file, so on central counterparts, the EMIR, European Market Infrastructure legislation, and including also some specific elements like the legal entity identifiers that some of you, I think, know. On those files, definitely, Kay was key. If I don't want to play on words, but you were key on those files. And I think it's explained largely by your previous industry experience. So in a few minutes, if you could just illustrate the positive conjunction between the political side that I referred to and your industry background, maybe in a few seconds or a few minutes.
Absolutely, Stéphane, and thank you to ICMA for inviting me today. And as we say, 15 minutes to actually describe how the financial services sector globally is changing and reforming is a bit of a challenge. But I mean, I am a former investment banker and hedge fund founder, so I had a background in finance before I went to the European Parliament, and then found myself in Brussels in 2019 when the entire financial infrastructure and legislative program had to be changed as a result of what had happened in the global financial crisis. And so Europe, for the first time, was taking over UK legislation as well as for the other 27 countries at the time. And so it was an interesting period when, as a former banker, hedge fund manager, finding myself at the crux of that change in legislation. But to be fair, it now gives me a very different platform as an advisor to a number of companies right now, and also having a legislative role in the House of Lords for the rest of my peerage, for the rest of my life. It means I get to look at the bigger picture things now. And so spending a lot of time saying, well, it was all well and good having that crisis, and the regulation that came out was much coordinated globally. but it was very prescriptive, very rules-based. Is that fit for a future digitized, innovation-led world? And I would argue that probably not.
Okay. And so considering that, I would say, a series of technological innovations that you have seen during the last few years, I mean, we could illustrate in various ways the acceleration of, in a way, markets. The settlement process on traditional settlement is accelerating from T+2 to T+1 to be implemented by the UK and the EU next year. We are seeing the, I would say, impressive development of DLT and blockchain on various aspects of financial markets, on markets themselves, on post-markets. We are seeing also the launch of tokenized, including native tokenized securities, including bonds, equities, funds, for instance, money market funds. So, and the progressive use of artificial intelligence within firms. And so how do you see, very sincerely, and I'm a former regulator, by the way, so I put some disclosure and disclaimer as well. I'm a former regulator, but how do you see both, of course, the way faster markets can de facto become more efficient, in which way, but also the risks which might be involved in such an acceleration and potentially at global level?
So I think it's fair to say, I mean, you've had 2.5 days of talking about the innovation, talking about AI and the impact on financial markets, talking about the way digitization is going to really fundamentally potentially change the way that the plumbing works. And, you know, is that a good or a bad thing? I would suggest it's a good thing because the financial markets have always evolved. They have always done the huge investment in innovation, and they've always then adopted. And they've been early adopters of technology over time. And the disruptors in the field typically will actually come along and provide a technology solution to some of the large incumbents. So it's a happy relationship of disruptors versus the incumbents, I would suggest, in financial services of old. May not be in the future, but certainly of old, that has been a symbiotic relationship. The way that I see AI at the moment, it's not just a tool. This is going to be systemically important to financial services going forwards. And it's going to be right across the board. I mean, we're already hearing the trading teams talking about using AI fundamentally to do their jobs. You then actually have all areas of the chain all being affected by AI, and not just as a productivity tool, but actually in terms of the efficiency, the speed, and indeed, you know, the accuracy of some of that will be much improved by using AI as a systemically important platform rather than just a tool to improve productivity of individuals. And then you have the digitization agenda. So tokenization and the way that digital money is going to interact, for me, isn't just about speed for speed's sake, but actually moving global collateral around in real time is going to fundamentally change the way that global markets work. And, you know, when we talk about T+2 or T+1, the reality is that it's going to be irrelevant if you find a way of releasing collateral and allowing the collateral to go with where the risk is and to match your risk with that collateral movement. And we're seeing it already. There are experiments all around the world, and I say experiments loosely because I wouldn't say that a third of US Treasury markets going digital is really an experiment. That's basically demonstrated that it has worked, and therefore you can do these things really quickly. So the 24/7 nature of the digital version of US Treasuries right now being operated by DTCC on the Canton network is doing that. And you've got people like Tradeweb doing the repo market to allow that to function 24/7. The reality is we've seen that happen over the last year, and as DTCC accelerates and takes the rest of its assets to actually coexist with the paper version and the digital version, I think we're going to see a massive uptake in this. Now, what does that mean for the rest of the market? You know, global financial regulation, post-global financial crash, meant that the regulators, really, yourselves included, at sort of the Trésor and the AMF, actually felt that you needed to slow things down in many instances. You needed to put an intermediary, regulated intermediary in the middle, and you needed to have ultimate control and data. Now, what does that mean in a digitized version of that, where you're actually collapsing timing, you're collapsing intermediaries, and you're potentially collapsing the frictions? So how do you now regulate in that new world? And I think we have to look at it very differently. And I think there are ways in which you can do that. The US is deciding to not apply certain rules at this point in time, and it has that ability to do it through its various mechanisms, through its regulators. But the rest of the world might not find it so easy, and particularly here on this continent, it is not so easy to allow those to go from pilots in a closed ecosystem to actually being out in the open marketplace, demonstrating a proof of principle.
Just a brief comment, but maybe also there is maybe a lack of financing of innovation and to make it work and develop at a large scale in Europe. And there is probably some, I read very recently a report by ESMA, the European regulator, on quantum computing. And when you see the difference in amount of private financing in the US by venture capital versus to be honest with you, not only the EU but also the UK, there is a huge gap in the lack of private financing to facilitate innovation for the next steps, which might facilitate more innovative financial markets, I think, still on that European side.
So interestingly, I don't think the UK is suffering from a lack of capital with regards to its financial services. The fintech ecosystem in the UK is extremely well funded. By, in part, the global capital coming in. It's not necessarily homegrown, but actually that doesn't matter. This is a global financial center, global companies, we welcome coming here. The reality for me is not about innovation. We have phenomenal innovation on this continent. It's what we do with it. If you have a system ongoing that is going to be very prescriptive, very rules-based, and you have to wait for those rules to be announced and those rules to be applied, you are always going to be behind. Whereas I think you need to move to a much more innovation-led regulatory environment. So the US has taken a very different approach and has decided to go more of a conflicts of interest and enforcement route. The European Union is still going to be rules-based, I think, for the foreseeable future, simply because I don't see how you can get 27 capital markets to function unless you have a rules-based system that is put across the European level. So I think it's very difficult for the EU to move. The UK, I hope, is showing signs that we are becoming an innovation-led regulatory environment, which is much more of a principles-based. It's early days, but we're seeing the old Financial Services and Markets Act of 2023 allows the regulators to change the rules very quickly in an agile way. If they have the data, they can change the rules without going to primary legislation. We're also seeing very much the digital security sandbox, which I'm sure the Bank of England or the FCA spoke about. It's a joint project between the two of them. It's very much innovation-led. So again, like the US, they are actually relaxing the rules and you are allowed to have a route to market. So you are in the marketplace. This is not a sandbox. I think it was misnamed because the reality is this allows you to really have that innovation and to go out to market. That, I think, is the way forwards. The Swiss are doing it, the Singaporeans are doing it, and as I say, the US are actually taking that very relaxed approach. That, I think, means that we can accelerate things very, very quickly if we move to that. And I'm optimistic that we will find a way of making these different jurisdictions interoperable. And if we are in 24/7 market territory, interoperable large pools of liquidity globally is far preferable to shallow, thin pools of liquidity that are actually ring-fenced in different jurisdictions.
Okay, so definitely you are very optimistic on short-term initiatives which are now coming up in London. But for the longer term, how do you see the, I would say, the remaining competitiveness of the UK marketplace in the really long term above or beyond any change of government and so on, how to keep basically the City of London, to be clear, competitive in the long term?
So I think Europe as a continent has got to move quickly. And this idea that we have to wait until we have done all of the analysis, we have got it 100% right, means that we will fall behind. And in a digitized world, it could be winner takes all. I mean, the reality is that, you know, we have a very large global financial center in the States, which is now moving very quickly to adoption. So we therefore need to move in tandem. I think there's a huge opportunity to do that. And therefore, we need to be comfortable that when we've got it 80% right, we can get the remaining 20% done as we go along. The reality is, you know, the delay in getting it perfect will mean that we fall behind. So I think speed is of the essence, not just for those who want 24/7 and instant collateral movement, but also for our regulators. We need to move very quickly. And in order to do that, the first step is to move from primary legislation to a rule book in order to facilitate that agility, which has been done here in the UK and in other jurisdictions. And I think we now need to go the other way, that the regulators also need to understand that they need to move quickly, and that delay to get perfect will actually mean that we might lose the markets, the global financial markets going forwards. I hope not. I'm very optimistic that we can move quickly. And you'll have heard from many of those regulators over the last couple of days. I am now a lot more optimistic that they are actually able to understand the value in speed.
Definitely, I think that the ICMA will remain at your disposal to facilitate that speed that you are requesting. So this is the end of that very short fireside session. We could have talked about such topics for a very, very long time, in fact, but probably you will be happy to get your lunch, not right after, stay for the remaining morning sessions, but definitely we have to close now our session. So thanks again a lot, Kay, for accepting that invitation by the ICMA for that high-level views and I would say offensive views or competitive views from a UK perspective. Thanks a lot.
Thank you, Stéphane.